Now, in a boost for oil players, the government on Friday slashed windfall taxes on oil produced as well as refined products like diesel and aviation turbine fuel, ATF. Well, stocks reacted, but then, as the market was weighed down, they gave up bulk of these gains. But this is important. Probal Sen is energy analyst at ICICI Securities. He's joining us now to take some questions. Probal, great to have you with us here. Thank you very much. For a producer like ONGC, given what the government has done, can we say that the government is okay with the company realizing between, say, 70 and 80 or 75 and $80 a barrel? So we know what the comfort for the government is, beyond which maybe, more will be taken away in terms of these taxes, etc. Your thoughts?
Yes, I think that's something that the oil minister when the windfall tax regime actually started, he had also very clearly mentioned about an acceptable level of basically about $75 to $80, where I think at that point of time, crude had gone up to about 120. And he had mentioned that if crude collapses by another $40, then this tax would be removed. And I think very clearly the government has kept its focus on that particular level. And the taxes have been continuously getting revised to sort of ensure that $75 to $80 is what ONGC and Oil India continue to make. So, to that extent, I think that is a very clear floor that the government is comfortable with. And from company's perspective, I would say this realization is still almost a decade high if you really track their effective realizations for a very long period of time. So I think it actually works out for both the players, this kind of a price level.
ONGC Probal is pricing in what, $40, $50?
Yes, I think at 150 rupees or 140 to 150 rupees a share, they have never really priced anything beyond $55 over a longer term.
So if oil prices stay here, there should be money to be made here in ONGC?
No, absolutely. And I think one of the things that we have continuously highlighted is precisely what I just said, that even if you assume windfall taxes continue to be there and their realizations are capped at around $75, and gas prices also sort of, reduce for the near term, given the Kirit Parikh committee recommendations to somewhere around $7, going to $8, these numbers are still 7-8 year highs as far as the company is concerned. And now that they've spoken about the FPSO actually coming through and having entered Indian waters, from what we understand, basically the basic last remaining piece which they need to bring in and then connect to start their KG Basin asset. I would say the biggest worry that has been there for the last 5-6 years, which is production growth, can also start to see a little bit of improvement. So to that extent, we would definitely look at material upsides from these levels for ONGC.
Okay, all right. So that's about ONGC, Probal. But what about the other stocks? What are the top buys you have?
Continue to like specific names in the gas space, particularly given the reforms that have been announced both for transmission tariffs as well as the imminent gas price revision, which we are kind of hoping that the committee recommendations are accepted in full. We would say that on the CGD space, we continue to like IGL and MGL both. I think the transmission plays, GSPL, I think looks pretty good at these levels. ONGC and Oil India, I already said, we continue to like, and in the OMCs also, given the improvement that is happening on the marketing losses, given the, softer crude and product prices, and the fact that GRMs continue to hold up at fairly healthy levels. We like all three names at this point of time.
Probal, thank you very much for joining in. The pre-opening rates are very quiet.